for starting with the Moby Talks. Good evening, everybody. Welcome to Crypto Pulse Weekly. Very happy to be back. Sorry, we couldn't continue. We couldn't continue with last week because I had this seminar that I attended, and somebody was asking me what kind of seminar. I was like, okay, wait, stop. It's one of those seminars that they do all day and you have 3 days running. So I thought I was going to finish on time on the day, but at 6:30, we're still having the seminar. They ran like that for both Saturday and Sunday. But yeah, it's all for a good cause. So welcome everybody. Welcome back to Crypto Pulse Weekly. We have quite a long list of things to cover today, and for people that have been watching their portfolio and been watching what happened during this week, I would say the worst is over. That's where I will start with, and then I'll explain during the course of the session today. So yeah, today as usual we'll talk about our market updates. We'll talk about crypto vital signs. We'll take the crypto drip and then the question and answers. The crypto drip is usually knowledge sharing session, and today I'll be doing a recap of what I talked about NFT and DeFi, and I will be talking about factors that affect the price of Bitcoin. So let's get started on market updates. As you would have observed, the price of Bitcoin has really tanked significantly this week, and I think last week's high was around 60 or 61,000. And it couldn't quite break up to the all-time high, and it came as low as 50,000 plus yesterday. And there are a number of factors that are responsible for that, but let's just say that it's a very mild outcome. Let me use that word, because unfortunately I don't have that table with me. I will have shared a table with me with you that shows the historical behavior of Bitcoin during the month of March. Almost every March is bad for the price of Bitcoin. Almost every March. It's almost invariable. So for this month to have gone largely unscathed with, I would say, 10% or 15% drop, well, I think it's manageable. And even though it played out annoyingly on the other alts, especially the major alts, and it caused price to dump significantly, I think it was still a fair retracement for the price of Bitcoin, because historically speaking, it's only 2013 that the price of Bitcoin did not significantly dump. Every other March since 2011, the price of Bitcoin has always, in one way or the other, dumped. So yeah, it took a hit significantly this week, and that's because there was some huge options. So I'll talk about options towards the end of the discussion today. We call them options expiring. They're like contracts. They're like trade contracts that you make on exchanges, especially big exchanges like the Chicago Mercantile Exchange or BACT in the the US. These are like major exchanges like the New York Stock Exchange. And what these contracts do is that they give people the option to either buy or sell a particular commodity on a particular day at a particular price. Now, it's like trying to manipulate the price with reverse engineering, but because it goes through a longer route, you can't really prove it that it's manipulating the price, but it does manipulate the price. When you think about the kind of volumes that go into those kind of contracts, you will see why there's a lot of incentive for the price to stay in range of those contracts. So the way those contracts work is almost like saying, I put down $1 billion to say that the price of Bitcoin is not going to exceed $55,000 by the last working day or the last Friday of March, which is today. Most options expire on the last Friday of each month. So if I put that kind of options in place, I say that if it doesn't go above, then I have the opportunity of selling or I have the opportunity of buying, depending on which side of the contract it's called put or bid. I can't remember. Put or ask. I can't remember which one now, but one is put and one is still. I can't remember the other one. But it's basically saying if the price meets my conditions, I have the option to sell at that particular price. Or if it meets my condition, I have the option to buy at that particular price. This has been used forever. I mean, as far back as money has become, I mean, the US dollar has become the national reserve, global reserve. They've always used options to manipulate the price. So if I say that I have options expiry for $6 billion, that's the largest options expiry Bitcoin has ever had in its history. And it was for this Friday. So what it meant was that there was no way the price of Bitcoin will have gone above 60,000 because many of those options were saying that, you know, the price should not rise beyond 55,000 or 4,000. So what it meant was the same people who have put down huge sums of dollars to purchase those options will go into the OTC market or go into the retail market and try to sell off against that particular commodity just so that those conditions are met. It's a long story. I mean, it happens in almost all the global markets, forex markets, gold, crude oil. It's commodities markets. It's a common institutional play with a view to just manipulate the price to suit their own ends. So that's one of the major factors that have affected the price, especially this week, because usually the week of the options expiry and like 2 days, 48 hours to 24 hours before the options expiry, you begin to see some very nasty price behaviors. And it happens, I mean, it's happened many times on Bitcoin. It happens even in the forex market as well, as I was earlier explaining. So yeah, it's expected, but as I was telling someone, I totally forgot. I totally forgot that this week was the last. That the last Friday was this week. I thought the last Friday was next week. I didn't even realize. I was wondering yesterday and the day before yesterday that the price drop. That the price drop did not seem to make sense. Only to realize that what was happening was this options expiry thingy. So yeah, from time to time, you expect to, especially on the week of the last Friday of every month, you expect some abnormal price behaviors. And that's one of the reasons why we've had this sluggish price on Bitcoin. And because of that sell pressure, many of the gains that the price will have had on the back of the COVID stimulus relief has not shown. So right now, as I was saying during the week, all the assets are undervalued. Some of them are beginning to climb back, or all of them, including Bitcoin, are undervalued. Bitcoin is probably at 50 something, 53K now. All of them are undervalued because if there was no external manipulation, the price would be way higher than what it is now. It will probably be in the 70s already. If we pan that against supply, I think one of these days I'm going to show you the supply charts, the exchanges supply. You will see that exchanges supply has been dropping every single month for the past 2 years. Every single month, Bitcoin exchange supply has been dropping every single month, this month inclusive. So it doesn't make sense that you're having a decrease in supply. At the same time, the price is not climbing. So it tells you that some things don't add up. So that's just the high-level explanation of what happened or what has happened during the week. In terms of regulation, there was also the news that US government was going to auction some Bitcoins. But when I checked, I mean, it wasn't up to 100, all the things you are talking about. So I was like, okay, this is not enough to generate any significant movements or momentum in the markets. So yeah, they did say that. Then there was some guys saying that the government should consider implementing Japan's blueprint. So as I mentioned, I think about 3 weeks ago, Japan is planning from 2022 to start implementing crypto tax as at the rate of capital gains, which is 20%. So I guess most countries will be watching out for how Japan goes about it and just do a copy and paste of their of their model. But what I think is going to happen is, or if they start that, then people will stop selling their cryptos, because what it then means is if you don't sell, I mean, you can't, if you've not capitalized, then nobody can hold you to say you have made any gains. Moving on, in terms of sentiments, I think, as I said earlier on, the March dip are taking its course, and it's played out on this week. On-chain data on the Bitcoin network is still very bullish, very, very bullish. And April characteristically has been a bullish month for Bitcoin. It always is a bullish month for Bitcoin from time. from time immemorial, it's always a bullish month for Bitcoin. So I expect that we will see some very significant price movements this one. And I'll explain some of the backgrounds later. But definitely we will see some significant price movement. And bearing in mind that Bitcoin dominance is dropping as well, which I'll talk about later, it's inevitable that the price will be significantly higher. I mean, the highest options for the end of April right now is at $80,000 Bitcoin. So it means that at the minimum, you can expect the price of Bitcoin to gain at least from where we are now, 20 to 30% from the current prices during the month of April. Let's move on to further analysis, as I earlier explained. So the factors that have been responsible, quote unquote, sorry, let me get this out of the way. Yes, Chinelo, I'm experiencing shorting, but this is not direct shorting. This is reverse engineered shorting. So shorting happens on the futures and derivatives exchange, which is directly on the exchanges. This is happening on regular stock trading and commodity trading exchanges. This options expiry. And option expiry is a major play, for instance, in Forex, because it helps institutions, major banks, and major corporations to hold down the value of a particular currency pair in their favor if they have huge transactions during that period. That was supposed to be the legitimate and the real reason for allowing options expiry. But of course, we know now that it's just some reverse manipulation. So options expiry hold the price. It will affect any, if it's in the Forex market, if you just see that the price will just stay static and you'll be in a very small, they call it silent channels. The price will just be in a very small range until that options expires, then the price starts going crazy. So that's the same thing as at play here. So they're not directly shorting it, but they're preventing the price from bouncing up. It's like holding down a basketball ball at the bottom of a pool. As long as you're holding it down, it stays down with you. But immediately you let it go, I mean, you know it's going to go up. So naturally, what they're doing is holding down that ball. They're not shorting it as it were, but they're holding it down so that the price doesn't hurt their own transactions, quote unquote. Then I think there might be some collaboration with some huge whales to sell at 60K as well. So because over the weekend, when the price hit 60K, there was a heat map that showed that there was a lot of sell demand. And I mean, if a huge whale comes and sell 10 Bitcoins at once, of course, the price is going to crash. And once the price crash, because there are a lot of people that are into leverage trading is where you borrow money from the exchange. Once the price crashes like that, most of the leverage traders get wiped out because their trades are based on very small margins and very small price movements. So that in essence triggers additional sell-offs. So all any whale needs to do is move 10 Bitcoin, or I mean, now that Bitcoin is 550K. So move like 10 or 20 Bitcoins and sell at once. Once you sell at once, the price drops. That huge drop on the market triggers other sell orders by default. And because there are AI bots also that are reading many of those exchanges. So when you have those kind of huge orders, it automatically triggers other people to sell. So as I said, they're not shorting the market, but when they get whales to short the market at intervals, what happens is the price is not able to rise. And because people are getting burnt, quote unquote, nobody wants to get into position by taking any long position. So that's why the prices have been, that static. So yeah, we also found out that many of so there are two sides usually to the people who are participating in option expiries. So some are betting that the prices will be high. The other parties are betting that the prices will be low. So the guys betting that the prices will be low were betting in the region of 44,000. But we also found out that there were some counterparties, like institutions that already placed huge buy orders at 50 and 52,000. So what happens was when the market got to 50 and 52,000, all the Bitcoins there got exhausted because there are huge orders mopping up the Bitcoins at that level. And I mean, there's just only maybe at any point in time, less than 2 million. Now, I'm sure it should be like 1.5 million Bitcoin in circulation throughout the world currently at any point in time. So there's really not too much Bitcoin going around. And that's why when the price drops, It doesn't significantly drop like you will see in some other altcoins or historically like it will happen in 2017 or 2013. So yeah, that's what has caught the pricing between 50 and 60. As I said, this is 7 p.m. now. By 10 p.m., which is 5 p.m. US, the markets will be closing in US. And you can quote me if I say that you start to see the price begin to appreciate. Oh, sorry, that was my Apple Watch prognosing into my business. So you should start seeing the price. You start seeing the price appreciates from end of day, US time today. So let's go on. Sorry, I needed to put that watch away. So yeah, I wanted to go back to this story. I remember sharing this story about 3 weeks ago, or 2 weeks ago, when I said that a number of huge companies were taking on Bitcoin as a method of payment. But two things happened. Two things happened in the course of the last 2 weeks. One was, we all know that Tesla is buying Bitcoin. They doubled down on the earlier assertion and said that they will now collect payments for Tesla purchase in the UK, in the US in Bitcoins. And I think it was even Elon Musk that put out a tweet that said they're not going to change the Bitcoin back to fiat. They're going to keep it as fiat. That any Bitcoin that they receive as purchase payments for their Teslas, that they're going to keep it in Bitcoin. What it is saying, I think I need to explain this. What it is saying is that accountants will need to go back to school, because now they will have to learn blockchain and crypto asset accounting, which was not in any accounting books or in any accounting standards up until this moment. Because what the institutions are doing is that the institutions are putting Bitcoins on their balance sheet. And what they're saying is, even though we receive payment in Bitcoin, we'll move it from our P&L to our balance sheet and we'll keep it under the asset column. And accountants will now be forced, quote and unquote, to play catch up and find how they're going to treat the value of Bitcoin. How are you going to write it off or write it up at the end of the year? Are you going to use nominal value? Are you going to use market value? If you classify it as an asset, how are you going to calculate depreciation, if any? So it's interesting to me, because when I look at business accounting and I look at what First MicroStrategy, now Tesla, and many of these guys are doing, it's almost like they're creating a whole new level of corporate accounting that has not been in existence. But anything is exciting. I find it interesting, and if you listen to people like Michael Saylor, you might understand why many of them are taking this position without. It's just that Elon Musk being Elon Musk, he will always talk about it one way or the other. But many of them are doing this without saying anything. They're not even disclosing their positions. It's only the guys who are like publicly quoted companies that are obliged by law to disclose what they're doing. For the other guys that are private entities, they're not disclosing their position. They're just going about it and adding Bitcoin to their balance sheet and moving on. And that will lead me to another story that I'm going to talk about later. But I just thought people should realize that this change is coming faster than we think, and it's happening faster than we already know, actually. Now, moving on to this Bloomberg analytics, they call them Bloomberg Intelligence, that the research and development group for Bloomberg was saying that they think Bloomberg BTC or Bitcoin is going to achieve 400,000 this year, because institutions are looking for protection against inflation, and they're looking for a way to hedge their positions in terms of an inflationary hedge. And for the benefit of people who are just joining today or maybe are new to those concepts, I'm just going to try to explain that again. So usually when an economy is booming well, you will have good productivity, the GDP will be good. There will be a lot of output from that economy. And then the government or the central bank try to control They call it monetary policy, but what they're trying to do is actually control money supply. Because we no longer have gold as the standard of currencies, we have the US dollar. Each country has to manipulate their money supply in response to how well their economy is doing. So take the last 12 months, for instance. COVID anniversary was about 1 week ago. Between now and March last year, the US government has printed 10% of the total value of already existing US dollars. 10%. So if there was $1.9 trillion, I mean, or let's say there was $1,900 trillion ever produced before 2020. Between 2020 and now, they produce 190 trillion. That's exactly what's happened. Now, it might not immediately be, evident when you're looking at the economy and looking at the whole COVID situation. But the way it plays out is the cost of what you are buying. So if you had $1,000 in March 2020, what it meant was that $1,000 in true value is worth about 15% thereabouts today. Is what about $85 today. So it has lost 15% of its purchasing power. It's only this obvious because of COVID. Ordinarily, you will never really appreciate it, especially if you live in the developed world. You like the Western world, you never really appreciate the effect of this kind of inflation. But because it happened all of a sudden due to COVID, and then the government needs to react, and they reacted very quickly and pumped a lot of money into the system, you can tell and you can see that the purchasing power of all currencies, especially the US dollar, has dropped. And what that means is that if you had 100,000 in the bank or $10,000 in the bank, and you kept that 10,000 for the next 5 years, chances are your 10,000 is going to be worth $1,000 in 6 years' time, because the purchasing power of that $10,000 is weakened by the amount of money that is being supplied into the system. If you think back to basic economics, the more supply you have, the lower the price is likely to be if demand is constant. So monetary supply affects the market and affects the purchasing power and affects people's assets and the valuation of people's assets because of inflation. So the reason many of the institutions are rushing to Bitcoin now is because they suddenly realize that, hey, we can hedge our position in this market by taking some of our balance sheets and putting it in Bitcoin. And then the depreciation we might have suffered from the government's printing of money will have been reduced significantly. So that long story that I just told you is the reason why people like Bloomberg are now coming out to say, yeah, we think Bitcoin is going to do 400K. I mean, there was already analysts before now saying that we're going to have anywhere between 300 and 500,000 Bitcoin before the year runs out. So their analysis or their extrapolation of 400K is not really out of the blues. And it's not like, they're just touching their tongue and trying to find out what the price could be at its peak. So having said that, it's important to realize that if Bloomberg has come out to say this, you can be aware that many of the other guys are already thinking this way. So like somebody asked me, what do I do if my Bitcoin is losing value? Don't do anything, just hold it. There is no issues with your Bitcoin. The problem is not with the Bitcoin. The problem is with the external forces, which I'll talk about shortly. Yeah, these two guys in this picture are my crypto mentors. Like, they are the only mentors I have in this space. They're like the people I look up to when it comes to, and for different reasons as well, when it comes to issue of cryptocurrency. The one on the left, Michael Saylor, because of his deep thinking and his analytical mind. He has the mind of a scientist, but he's a businessman. He's an engineer. He's like, he studied information technology and engineering in MIT. So he's an engineer and also a business person. So he thinks logically, and he's able to think like 2 steps away from any situation. So when you listen to him, it's almost like getting a brain turn on, because the depth of thinking, it's almost not comparable to every other thing that's happening around you. Then the guy on the right is a long-term hedge fund manager, used to be a Wall Street trader, quite successful as a Wall Street trader, but more recently he's been known as they call him, maybe call him the oracle of cryptocurrencies, because usually the picks that he has, so he has this research group that we're subscribed to. The picks that he has every year, most of his picks, in fact, almost like 3 or 4 years back to back now, the most performing cryptocurrency has been his pick for the year. Take Chainlink, for instance. He picked Chainlink last year. Chainlink went from cents, literally, to what it is now. So he's like, what's the name of this man? The Oracle of Omaha, Buffett. It's like the Buffett of cryptocurrencies, because he sort of sees emerging markets, and he sees asset classes that are not yet matured. And when he brings them to people's attention, because he already has clout within the New York and Wall Street circles, usually those kind of assets then get the kind of attention you need. And it's almost like a self-fulfilling prophecy. You find those assets performing extraordinarily. Now, why am I bringing them up? He did a podcast during the week for subscribers, and he mentioned that he has been listening to Michael Saylor. And I smiled. Immediately he said that, I smiled, because I'm like, yeah, you can't listen to Michael Saylor and not, if you're a Bitcoin person or a crypto person, if you listen to Michael Saylor and you understand what he's saying, you will think twice about your life. And he said he's been listening to Michael Saylor, and he thinks that Michael Saylor is a very deep thinker, and it tends to process things like 2-3 steps ahead of the present. And he has thought about everything that he said as regards, Bitcoin as a storage of value and a possible major asset class on its own. But what strikes him the most is that he's coming to agree with that thought pattern that Bitcoin might eventually be like choice real estate, where you never sell it, but you use it as leverage. So he gave an example in that podcast. He said, consider having choice property in downtown New York, or in central London, or in Paris. He said, if you had that property and it was sizable and was a good chunk, he said, will you want to sell it? Because you know that once you sell it, you've lost a significant leverage, that you never want to sell it, that you probably prefer to put it to the trust and pass it down to your generation. And the trust keeps managing the asset, and they can use the asset as leverage to take loans and do all sorts of things to generate other assets. They never sell. That people never or seldomly sell those kind of choice assets because it's irreplaceable. He said it's almost like that's what's going to happen to Bitcoin. That is getting to a place where he might not be able to tell anybody to sell their Bitcoins ever again. And that's a profound statement. But if you happen to have listened to either of these two guys over a period of time, you understand where they're coming from. And where they're coming from is this: every person of influence, every person of wealth are always looking for ways to either increase their wealth or preserve their wealth. Now, there are traditional ways by which they've managed to increase their wealth. They buy into companies, buy into government bonds, or buy government debts or real estate. But when you begin to have something that provides you an opportunity to preserve your wealth, and not only that, it's scarce, it's not easily replaceable. It's almost like an antiquity, or like a work of art that continues to gain value from hand to hand. So he's saying that this is providing the wealthiest an opportunity to preserve their wealth at a fraction of the cost of what it will have taken them, which is true. Because if you had a building in downtown New York, for instance, of course you pay the equivalent of council tax in the US, the UK, municipal tax. You pay insurance, you pay for the maintenance of the building. If there was any mortgage or any loan, you maintain the building. But here you are, you have this crypto or like crypto real estate that you don't need to maintain. You only need to keep the keys, and you can preserve wealth as long as you want. So people are not seeing this. Only very few, of course. The very rich, tech-minded guys are already seeing this. You have people who already have billions in bitcoins. Some of them are already into this. The old money might not see this because it's very hard to convert the concept of physical brick and mortar into something in cyberspace. But what this is saying to me, and what I'm saying to you is, you should consider Bitcoin as your retirement plan. It's not a financial advice. I'm not a financial advisor, but I'm telling you what's going through my mind. Because if the government has printed money that's going to devalue the purchasing power by at least 5 to 10% every year, it means that if you don't have anything in assets that is generating more than 10% every year, which is like the hurdle rates, your purchasing power and your asset is diminishing. And I like something in closing. I like something that Michael Saylor said when one of these was it Bloomberg or CNBC guys was asking him. Obviously, the guy was not listening to what he was saying. The guy was just asking his question to know how he was going to answer back. He was saying that you want organizations who are working on behalf of their shareholders that are not as big as Microsoft and not as big as Apple to continue working their ass off while the government is printing money and devaluing, in essence, the output of their labor. He said it doesn't make sense to him. Now, the guy didn't understand what he was saying because the guy just pivoted and went on to talk about something else. But what the guy is saying is that I'm a business owner. I am working, my company staff, everybody's working to produce value for shareholders. Meanwhile, the government is degrading our value every year by money supply. And that's not, as far as it's concerned, that's not sustainable. And I understand that. What this is doing is giving them an opportunity to preserve, quote unquote, their labor without the risk of depreciation. This one is just food for thought. I'm not going to say more than that, but I thought it was important to bring out, these are two different people. This is an investment banker, right? This is a business owner and entrepreneur who's run his company for more than 25 years, the publicly listed company. And for them to have this convergence in thoughts is a major shift for me. And I think that everybody should consider it and everybody should have that at the back of their mind. So in my mind, I'm thinking maybe in the future we'll be buying, we'll be using SATs as collateral to do all that stuff in the real world. But yeah, that's just my divergent thought. But I thought it was important to put that out there. In another news, America's Holders Bank, BNY Mellon, is investing in a crypto startup called Fireblocks. Fireblocks is what they want to do is to be a custodian solution. So they'll custody cryptocurrencies or crypto assets on behalf of institutions, and then they'll issue them on behalf of institutions. So it's basically what the bank is doing. It's just that, okay, the current setup of most banks does not allow for that kind of business. So for them to sort of pivot into it, they probably taking majority share in Fireblocks or probably bought over Fireblocks entirely to give them opportunity to participate. So as if you're a big bank, you're the CEO of the big bank or one of the big banks and you're seeing what's happening in space, naturally, you will not want to be left behind. Like Ivan on Tech will say, you don't want to be the first, but you don't want to be the last. So once you see that big boys are beginning to play in the field, you're already taking positions and finding how you're going to participate. Just like our dear friend JP Morgan that was saying in 2017 that he was going to sack any of his traders that was trading Bitcoin. And, the funny thing was about that particular incident was that weekend, the weekend of that week that he made that statement, his traders in London were buying Bitcoins on behalf of the company. Because what happens was immediately he made that statement, Bitcoin dropped 20% in value, in price, that particular. You see them coming back now to say that, Bitcoin is actually a good store of value and all that. There was another news I didn't bring up because I didn't think it was worth my space. Ray Dalio, one of these hedge fund managers, was saying during the week that he thinks that government is going to regulate Bitcoin and government is going to ban it, and its value is going to go to zero. Now, when you hear people like that talk, I mean, people that supposedly have a lot of clouds and a lot of following, it makes the newer investors shiver and quickly sell off in panic. But what they're really trying to do is the they're using their position to manipulate the market, because if he comes out and says something like that, it gives him opportunity to amass Bitcoin at a lower price than whatever price he wants. If you remember what happened with Guggenheim funds, Guggenheim funds and hedge fund that was planning to invest in Grayscale, Guggenheim funds in December was saying, Bitcoin has a capacity to go to 200 and beyond. Then when it happened that after they filed with Security and Exchange Commission in the US, they said they were not going to give them updates of permission until January. And between the first week of January and the third week of January, Bitcoin was in the news for saying something bad about Bitcoin. Like, we think it's a good time for everybody to take profits now because the price of Bitcoin is over inflated, blah, blah, blah. They were just talking down Bitcoin. And all of a sudden, once they bought Bitcoin, or they got the permission to buy at the end of January, come February, they started singing another song. So yeah, people will always look for ways to use their platform to try to, especially if they're people of influence, to try to shut the market or to try to push down the prices. If you remember, I talked about Bill Gates saying that he doesn't think that people should go with Bitcoin, and he doesn't think that he doesn't own Bitcoin. And I was saying that that's a lie, because at that time I already had information that Microsoft, through his various companies like Xbox, were already collecting cryptocurrencies for payments. So the rich doesn't want. It's funny. I don't know how the rich. It's some kind of, I don't know whether it's a crab mentality, but these are super rich people. So the super rich people think that maybe if you give everybody the opportunity to be rich, everybody will be rich. It's not true. Not everybody wants to be rich. So I don't understand that kind of thinking that happens to some very wealthy people, to think that if you give everybody access to information or access to get wealth, not everybody will take it, because not everybody really wants to be rich. Anyways, so these guys, they're taking positions. That's the oldest bank in America, positioning itself for crypto custody solutions. So Malonsky, you asked about market manipulation. Yeah, it's market manipulation, but market manipulation is, there is a legal market manipulation and there's the legal part. So it's just like tax. If you're saying tax evasion, there are two different words: tax evasion and tax avoidance. So if you say tax avoidance, the way it is defined is that you are using the loopholes between the regulation and the law to reduce your exposure as much as possible to tax. Of course, we all know that it's to protect the rich. Explains why Mr. Trump did not pay tax for so many years. So there are ambits, or there are opportunities within the law and within each regulation to allow the rich to manipulate and maneuver themselves without really breaking the law. So it's not legal. It's not outrightly illegal, because they are doing it through a Security and Exchange sanctioned organization or platform, and what they are doing is just contracts for prices. Gray area, yes, it's contracts for prices, but what they're doing is they're manipulating the prices to manipulate the underlying commodity. And generally, you talked about not getting your head around the means of exchange. You see, people do not make money by looking at charts every day. The people that make money in any market are the people that look at the long term. So if you're looking at any commodity or any asset class, never take your view from the hourly or the 4-hourly charts, because that's too small. You should look at the monthly, the yearly, and the weekly overview. That tells you what is really happening. So if we take, and I think I'm going to, for that purpose, when we get to technical analysis, I hope we'll still have time. I'm going to try to open up the weekly charts on TradingView, just to show you how an asset class like Bitcoin has really behaved over the last few years. Because if you start looking at the behavior over a longer term, immediately you see that, I mean, this thing is really not, it's really not as bad as people are making it. Like somebody was complaining about Bitcoin. I was saying that it's so volatile. I'm like, for S&P 500, it's more volatile than Bitcoin. Taking a snapshot of the last 1 year, S&P 500 has been more volatile than Bitcoin. So the fact that people are newer in the space and think that, you know, it shouldn't be volatile. It is going to be volatile. It's an evolving asset class. It's just hit 1 trillion this year. So naturally, it's expected that it will be volatile because it's still growing. But when you consider the year-on-year appreciation, then you begin to see that it's a lot better than any other asset class in its league, including gold, because it's just going up. So I'm going to give you, let me see. Let me just bring this up, for instance. This is 20, let's say 5 years. This is a 5-year view of Bitcoin. Now, if you look at this is, I mean, think about it. This is 2018. There is nothing volatile in the real sense of it. This is month on month. There's nothing really volatile about this, except here when you get to 2021. 2021 is when things start looking crazy. Before 2021, the only spike you had was 2018, which was the halving, which is something I'll talk about later. So in the real sense of it, when you condense the view and take, you know, zoom out, you will, like, I mean, it's not really year on year, you see that there is appreciation. So if you see, let's say 2020, the top in 2020 was around, initially around 11,000 mid-year before getting to about 20,000 at the end of the year. Before that time, 2018 was the last time the price went. So the price will go up and come down. But considering the fact that the price has now stayed above trillions for at least 2 months and is not likely to go back, the market volatility will continue to reduce because the market capitalization is increasing. So there's a lot more money in the market. So if the market suddenly were to improve or increase to 5 trillion this year, it means that you can sell off 2 billion and the market is not going to shake because there's a lot of volume. So that's exactly what's going to happen eventually. But when you look at year-on-year view, so from last year March to this year March, Bitcoin has essentially done 10x. Now, regardless of any volatility in between, there is nothing in the market that will have matched that kind of gains. So volatility is the price to pay for this kind of results, if you ask me. In another news, our lady Serena invested, not only her actually, just that she's the more popular part of the couple. Both her and her husband's company invested in a startup that allows people to obtain Bitcoin rewards for purchasing online. I think they're going to make a major hit because Serena has a lot of fans, and people want to earn Bitcoins, even though they might be earning sats, which is like 1 raised to power 10 or 1 raised to power 8 of Bitcoin, but that's fine. I think it's a good incentive. They'll make a lot of money. They've raised 5 million now. By the end of the year, they might be sitting on, who knows, 100 million. In another news for Ethereum, Ethereum has still struggled significantly in the last 1 month compared to all the other altcoins and compared to even Bitcoin. And the reason is very simple. Well, not very simple, 2 reasons. One is that there is a sudden rise in the NFT space. So in addition to DeFi, which uses mostly Ethereum, there's a sudden rise in the NFT space. I'll talk about NFT again. I'll revise it again at the end of today. The NFT space is demanding a lot of Ethereum because most of the NFTs use Ethereum as a means of payment. So when people sell their NFTs, let's say somebody creates a funny artwork of himself laughing, or maybe of Donald Trump, and says he wants to sell it for 100 million. If he successfully sells it for 100 million, most of the time, he's going to get paid in Ethereum for it. So when they get paid in Ethereum, they then go and sell off the Ethereum to cash out. So those kind of moves have been, in a way, pushing down the price. Secondly, there was some sort of infighting. I talked about it 2 or 3 weeks ago between the developers and the miners on the Ethereum blockchain, because the developers wanted the price of ETC or ETH to remain the way it is, meaning they should allow the gas fees to inflate during peak periods. But that's the miners. But the developers felt that the price should be adjusted in such a way that it's not too prohibitive when you have very high traffic on the blockchain. So there was this gridlock, and they were saying, don't implement the next upgrade on Ethereum, blah, blah, blah. And then there are some guys that were saying, some disgruntled developers that were saying they are going to cause a black swan event on the Ethereum blockchain and try to crash the blockchain on the 1st of April. Well, nobody knows whether that's true, because 1st of April also happens to be April Fool's Day. So no one is sure whether they're going to follow through on their threat or not. So it's been sluggish for Ethereum. I think if 1st of April comes and nothing happens, then I think Ethereum will start to climb up again. But considering the fact that we're already nearing alt season, we might start to see some significant movement in the price of Ethereum again. Moving on to Cardano. Cardano also suffered, well, not the same fate, but Cardano's price significantly crashed over the last 2 weeks. And then when Bitcoin price, started crashing, it even dumped further. But it started recovering, I think, earlier yesterday or today. Well, it started recovering when the price of Bitcoin started recovering after about 30 minutes, 30% correction. So hopefully, Cardano would pick up significantly, not hopefully, actually, it will pick up significantly in the month of April, because their smart contract upgrade will take effect on the 31st, meaning that people will now be able to generate smart contracts on Cardano. And they're also offering people to do like, that stuff they do in programming that they call compiler, that people can copy and paste their Ethereum codes into the Cardano blockchain without necessarily rewriting their codes. So it's also almost like you have a compiler for Ethereum inside the Cardano blockchain that helps them to transfer their codes essentially, so they won't have to rewrite. I think that's a good incentive for many of the developers, and it might cause some significant price appreciation for Cardano, considering the fact that Cardano is like the number one contender now for Ethereum's position, followed by Polkadot. So yeah, that's that for Cardano. For Polkadot, I think that we'll see some movement as well, because they have a lot of what you call parachain launches happening in April. I'll talk about that next week. So I think that there'll be some appreciation, because the price dipped significantly over the past 1 week as well. So definitely there'll be some movements. Talking about altcoin season, I mentioned 2 weeks ago that maybe the altcoin season was starting, but I think the altcoin season was sort of truncated because of the sluggish behavior of the price of Bitcoin. So now, 2 things have happened, and I will show that in the Crypto Vital analysis. One, Bitcoin price has refused to go up significantly, so it sort of stayed in range. 2, Bitcoin dominance has dropped by 3%, so it's dropped below 60%. As funny as it sounds, those 2 factors are usually the determinants to a large extent of what you call altcoin season, which is a season where the price of altcoins go up significantly. So now that has happened, and that happened at the end of March, towards the beginning of April. April is usually like an altcoin boom month. We expect to see significant growth, and that's why for the guys on the WhatsApp group, I've told you to buy some tokens. You can be sure that by the time you're cashing out at the end of April, you will be smiling to the banks. I can guarantee that, because that will be like the peak of the altcoin season. So you see the price go astronomically high for most of the altcoins, and DeFi and NFT tokens definitely will take the center stage in this particular altcoin season. For guys on the DeFi fundamental course, we'll talk about some profit making strategies on NFTs and DeFis during this season tomorrow. In terms of the Crypto Vital signs, we've seen some slight drop in market cap for Bitcoin. So before we had about 1.77 trillion in market cap. We've lost about 65 billion in the last, from the last two weeks. And of that, 17 billion has been lost to altcoins. So both altcoins and the overall market cap for Bitcoin, for cryptocurrencies, have taken a hit in the last 2 weeks for obvious reasons. One, because March is usually a bad month historically for Bitcoin and cryptos, and two, because of those options expiry that I was talking to you about before now. So it's expected, and frankly, I think it's not even as bad as projected, because everybody was saying then that we're going to 44,000. Some people are saying, we can even go to, that we can go to 40,000 or 39,000. Well, it's not that bad. So happy days. In terms of, let me try and pull up the chart. I need to get the chart for this one. This chart. I wanted to show the. Okay, let me use this one. Okay, even though this is too short term. That's the highest time frame I have in this one. Well, so right now, Bitcoin is at 53,649. On a higher time frame, it looks like we're going to see some action over the weekend. Like I said earlier on, the close for the day on New York market is about 5 to 6 p.m. UK, which is about 7 to 8 p.m. West African time. So we expect that we'll start seeing some price action by the end of today. So if we actually drill down, we see that we're sort of in a recovery phase right now from the standpoint of Bitcoin. So we took a dip all the way down to 50,600. So we're sort of heading back up now. The next target in range is somewhere between 70 and 82,000. I think that we have the opportunity of getting there maybe end of next week once we get fully into April. For now, we might see, so today is a bullish, this pattern is called a bullish engulfing handle, which means the price of the current day is bigger and larger than the price of the previous day. It's almost times 2. So it's a reversal or a correction sign, meaning that this trend down is over and is likely to continue going up. So in the first instance, we expect to meet 61,800 or 62,000 as our initial resistance. If we break it, which is very likely, then we can expect that we'll go higher. I don't have my ruler on this particular chart. I will have shown you that you will expect that the same trough that you have here, from trough to peak that you have here, you'll expect the same kind of behavior in estimating the targets. But generally speaking, everybody expects that we'll land somewhere between 75 and 80K by the end of the month. So just to put that in perspective for everyone, and as we come to Fear and Greed Index later, but market order flow is neutral, even though everybody is still positive about Bitcoin. I will show you the crypto, the crypto sentiment, which shows neutral. I mean, I've never seen neutral on this dashboard in a long time. It's usually very greedy or fear. So now this is called the Fear and Greed Index, and I always tell people, anytime the market is neutral to fear, it's a good time to buy, regardless of what the price is. If the market is neutral to fear, believe me, it's a good time to buy. So right now it's neutral. 2 weeks ago it was extreme. It was greed. This was 2 weeks ago. This was 3 weeks ago. It was extreme greed. So you see, we've dropped down from extreme greed to neutral. And if the market had continued dumping, it will have easily slipped into fear. But this sentiment, as I said, is a very good sentiment to determine when to buy. If you are looking for when to buy the dip fully, it's a good time to buy when you have the markets out of the green range, basically. The same thing goes for the technical analysis. Before now, both intraday and daily were on agreement to buy, but you can see intraday buyers have shifted to neutral. So it tells us that there is no strong demand on the market. It is something I like to call standard temperature and pressure, meaning there's no external manipulation of the markets. And in a bull market, there's no external manipulation. The price will naturally go because the demand is dropping. So right now, there's no external manipulation, which is reflected in this neutral. So definitely we'll get some price appreciation. In terms of our Wall Street psychology market cycle, I think we slipped back from thrill into the beginning of belief. And what will give some people a sense of thrill now is they wake up next week or 2 weeks time and Bitcoin is doing 70K. Then everybody will start shouting again. But yeah, I think we'll eventually get there. By stock to flow, we should actually be at 100K by middle of April, based on the stock to flow model. So yeah, anything between where we are now and 120 is still very much within range of expectation in terms of behavior from historical perspective. So yeah, we're still in this phase. I can tell you that by the time we get to June, we'll be in euphoria. Definitely, I can. June or July. I would have said July, but the market has a way of front running people's expectations. So it might happen before July, or it might. I don't think it will delay to August. I don't think so, because June is the end of a quarter, just like March is the end of a quarter. At the end of a quarter, you have what you call portfolio rebalancing that happens with most investment companies, meaning they try to distribute their profit and their loss to even out. So if they were investing in crypto, they were investing in stocks, they were investing in bonds, they were investing in equities, and crypto has now done, so let's say they have 2% in crypto, and crypto has done 20%, or crypto has done 50%. It means that their 2% is now 3%. So they need to take the extra 1% that they gain in crypto, take out the money and put it in the other ones that are not performing. It's a way of it's a way of hiding their failures, if you will. But they call it rebalancing. The idea is, you're spreading out the performance so that you arrive at an average, so that the underperforming assets and the overperforming one blend into an average performance, and that's what the customer or the investor sees. But it's a smart way of just spreading the risk and spreading the reward, essentially. So I expect that we'll see some movement in June. Definitely. Probably a huge correction. So yeah, in terms of what I wanted to talk about today, let me just quickly have a go at it. I have less than a minute left. I talked about NFTs last week as non-fungible tokens, created uniquely. So it's like a work of art. A work of art cannot be replicated exactly, even by the same artist. At most, it will be a copy of that original work of art. So these ones will have digital signatures that are unique to them, and because of that, they are being treated like works of art. So I can come up now and say that I have an NFT that shows a unique story, and that NFT to me is worth $1 million. If I get a good buyer, somebody will come and buy it from me. And the person, when he's going to sell it, will say, well, I bought it for $1 million, so I can't sell it for less than 1.5. So that's the way NFTs are working. They started out in the gaming industry, really, where people will buy stuff on their games, and they're not able to use those stuff. But Engine, as one of the first pioneer platforms for NFTs, came up with a solution to say that we can give you an NFT that will allow you buy your tokens on a game and carry that token from one game to the other. Meaning, you buy it, it gets stored on the blockchain. If you get to another game, you can deploy that same NFT, or you can even sell it in the open market. It's an evolving market, and it's from a technological standpoint, it's very exciting, and that's why NFTs are going crazy in terms of their prices. But like DeFi last year, after this April to June run, the prices might go flat again when all the technologists and the developers are taking profits on on their funds raised, essentially. So that's about NFT. That was what I talked about last time. What I wanted to talk about today was the factors affecting Bitcoin price, just for the purpose of guys who are just new to this and are wondering why is this price so volatile? Why is it always like, it's 10% up today, it's 30% down tomorrow? One, price of Bitcoin is behaving that way because on a general scale, it's still very small as an asset class. As I said earlier on, it's just over $1 trillion in market capitalization. That was $1 trillion is the market capitalization of the Forex market in 2007, 2008. That was the market capitalization of the Forex market back 2008. I remember very well because that was when I started trading Forex. So I remember then that Forex was $1 trillion in 2008. So it's still very small compared to the equities market, which is like 40 trillion right now. So we're just scraping the surface, as it were. Then the first thing that happens is you have this phenomenon called halving, which is a programmatically enforced deflationary measure. I'll explain that big word. The way governments and central banks print money every year to augment the economy or to manipulate, or what they call it monetary policy, to make sure the economy is not overperforming and underperforming. Bitcoin has a code in its making that says that every 4 years, the rate of production drops by half. What that does is there is no oversupply at any point in time, because if the rate of production was constant, you might get to a point where there's a glut and there's too much Bitcoin in circulation. But because of that halving that happens almost every 4 years, it creates a sort of demand every 4 years, because it means the rate of production drops. If production rate, which is supply, drops and demand is constant, it means that the price is going to go up. And that's why every halving phenomenon has been followed by significant prices in the price of Bitcoin. So in 2013, Bitcoin went from hundreds to thousands of dollars. In 2017, it went from $2,000 to almost 20K. In 2020, which was the last halving, it went from 20K, which was the previous high. It's now at 50K. Everybody's expecting that it might get to 200 or 300, because now you even have additional pressure in form of institutional demands, which I'm talking about shortly. Then you have, retail investors who, from time to time, buy or sell large volumes of Bitcoin. If you remember the example I gave about whale and shrimps about 3 or 4 weeks ago, you will understand why I said, retail investors. If a retail investor sells a large amount of Bitcoin, the price will drop sharply. If retail investors buy huge amounts, let's say a billionaire came and just slammed 15 billion, or let's say 12 billion on the market looking for Bitcoin, the price will go up significantly. Institutional demands in the form of hedge funds, exchange traded funds, and corporate purchases will always drive the price of Bitcoin. And bear this in mind, hedge funds are not buying Bitcoin for the sole purpose of just holding. They're buying Bitcoin for the purpose of leveraging on the profits. So at the beginning of each quarter, you see the price go up because they are buying in bulk. Then at the end of the quarter, you see the price dumping because they need to rebalance, as I explained 2 slides away. They need to, cut off the overperforming assets and shift it into the non-performing ones. So they will sell off some bits and the price will drop. ETFs are like stocks, shares based on cryptocurrencies, and those ones, even though they are newcomers. So the first ETF was in Canada. That one is already over $1 billion now in subscription. I understand that by April or May, the US is going to get its own cryptocurrency and Bitcoin ETF as well. So expect that this will also further drive the price high. Then I talked about options expiry at the beginning of the session, reverse engineered manipulation of the price. Then indices are very interesting because this one is only the technical know-hows that know about it. So indices like market capitalization, Bitcoin dominance, DXY. Sorry, I need to divert a bit. DXY is the index of the US dollar versus a basket of other currencies. It's usually just to test the strength of the US dollar against many other economies. So it's called the DXY index. Anytime the DXY is not performing, you can expect that Bitcoin is going to start kicking. Then you have what's this other one? Then there's another index, I can't remember the name now, that matches the US dollar's performance against itself. That also affects the price of Bitcoin because it looks like it's inversely proportional. These are the things that sort of make the price fluctuate. But over and above every other thing, institutional guys in forms of options, expiries, and derivatives are the ones that manipulate the price the most. And the reason is that they want to make sure as much as possible to buy for cheaper and sell at a higher price. So with that, I hope I've been able to convince and not convince you that these are the factors affecting the prices of Bitcoin. I'll take questions now. If you have questions on Instagram, just type it in out. I'll read them out and answer them. And I needed to, yeah, there were some questions. I don't find these questions anymore. Okay, they're here. Can you have NFT as a physical asset? Yes. So you can have NFT as a physical asset, but to legitimize that asset, how do I put it now? To legitimize that asset, if you want to, or to tokenize it, that's a better word to use. To tokenize that asset, I will need to create an NFT signature for that particular physical artwork. Now, when I create an NFT token as a replica of that physical artwork, there are two ways I can then treat that original artwork. Of course, I can inscribe the NFT's, what do you call, address, the token address on the artwork to say, you know, this is the proof of its validity. But what I've seen done in recent time is people take the actual physical artwork, take a 3D picture of it and burn the original, and then tokenize it, tokenize that image. It sounds crazy, but that's what I've seen done so far. So people take the actual image, put it in 3D, destroy the original, then tokenize that image as the NFT. It might not make sense to most of the people on this call because I figure most of the people on this call are not generation, what do they call them? I don't even know what generation they call them. Most of the people on this call probably know what a cassette recorder and a CD player is. It's not for these generations. It's for the generation of people who only knew the iPad or iPods. In fact, most of them didn't even know the iPods. So most of those newer generation guys already have purchases they do on games. They already interact with 3D media. So for them, acquiring a piece of art in its digital form doesn't make any difference to them because they don't think they need to see it physically. But for somebody who's Generation X, the generation of our parents, I mean, this makes absolute no sense because absolute nonsense. Why will you buy something you can't touch, for example? So yes, there are many of those NFTs that actually have physical replicas, but to make them more unique, some people have gone to great extent to destroy the original, create the image of the original, destroy it, and then tokenize that image and say, this is the NFT of this original. This is the only available one. And then based on that, sell the NFT. Somebody's asking for which altcoins to buy. It means you've not been part of CryptoPulse Weekly. If you belong to CryptoPulse Weekly WhatsApp group, you already know what altcoins to buy. I don't think we should go over that at this time. You can send me your number or DM me or send me a DM on Instagram if you want to be part of the WhatsApp group. But everybody on the WhatsApp group know what coins to buy. People already have over 50% or 100% on their coins at this point. I see another question here. Okay. Is there any other question on Zoom before we close out for the day? Jamima, do you have a question? Hello? Do you have a question, Jamima? Your mic is on. I can't see you. Okay, maybe you don't have a question. Okay, yeah. So I'm going to take how many coins? So many coins to buy with limited fund. Yes, I understand, Ginelo. there's so many coins to buy with limited fund, but I mean, it's important to understand that we're still at the very beginning of this quote unquote financial revolution, because this is like being in 1999 and hearing about Amazon and Apple stocks and all the fantastic things they're going to do in the future. And you're thinking, really, people are going to be using phone and internet to buy things. How is that possible? So yeah, we're still at the early stages. I think it's important apart from buying coins, and cashing out on coins. I think more importantly is the mindset, to adopt the mindset that the world is changing and we do have the opportunity to make significant impact, especially if we move early. And somebody once asked me, though, why are you doing this for the most part? Why are you doing this for free? And I said, well, I think it's my way of giving to the society and giving to the universe, especially people of color, to understand that we have an opportunity here to better our lots, quote and unquote, because if we adopt this kind of mindset and we are early adopters, we have the opportunity to make significant changes to our generation and to our people. So for me, that's the motivation for doing this. It's not just, yes, it's very important to make the money, yeah, but also the changes that this can be. I mean, you remember where I was lamenting about the CBN when they said that they were going to ban cryptocurrency, and I was saying, that was a critical opportunity to give ourselves some edge over even the developers, and some stupid guys are talking about trash about banning cryptocurrency. But yeah, I'm not going to go back to that. But really, it's important for us to have the mindset so that people realize that there's a shift going on, and the earlier you are tuned to that shift, the better it is for you. Like, so somebody was like telling me that. So are you saying that we shouldn't buy properties? Are you saying that we shouldn't have lands? No, I'm not saying you shouldn't have lands, but I'm saying to you that in the future, one Bitcoin might qualify you to be a billionaire. I mean, it sounds very crazy right now, but in another 10 or 15 years, it might not be too far-fetched, because once Bitcoin crosses 100,000, then 5x is 500,000 and 10x is 1 million. So yeah, at that point in time, probably people will not be selling Bitcoin anymore. They'll just be using it as, what do you call it now? Collateral. As collateral to get that. I mean, it's already happening anyway. I mean, not to say so, it's already happening. So right now, there are many platforms that will give you stable coin loans against your Bitcoins, and with loan to value ratio about 50% or thereabouts. And they charge you maybe like 8% interest or thereabouts, or 6% interest, depending on whether you're VIP on that platform. So it's already happening right before our very eyes. But it's important that we have that mindset. And I like what one NFL player did, the guy that I can't remember his name now, who last year when he got signed said he wanted half of his salary to be paid in Bitcoins. That half of his salary that got paid in Bitcoin from maybe September or September or August to December made him the highest earner on the NFL, because it literally meant that his salary went 5 times. Yeah, his salary went 5 times what it should have been. So we should understand that as people working or as people doing businesses, as entrepreneurs or as professionals, the output of our labor is that salary or that customer payment that we receive in the bank. And if that value is being diminished every year, you need to find a way to shelter that value. And as it is today, that is the most valid way to shelter that value. So the word, as they say, is enough for the wise. But that's the mindset that I think we need to adopt over and above just buying tokens when they are cheap and selling them when they are hot. It's important to adopt that mindset that the storage of value is shifting. Perspectives to storage of value is shifting. And the earlier we adopt that, the better for us and our generation. Thank you very much, everyone. If you don't have any further questions, I think it's mic drop points at this point. Any other question on Zoom before we round up?
Until all my efforts for my foundation.
Okay, thank you very much, everyone. To have a lovely, lovely evening. See you again next week.